Have you ever wondered why the rich just keep getting richer? It's not just luck. A big part of it is how they invest. And trust me, it's a completely different playbook than the one most of us are using. Let's dive into why billionaires don't invest like you and me and what we can learn from their strategies. First off, let's talk about the starting point. When most of us think about investing, we're thinking about growing our money, right? We put our savings into stocks, bonds, or maybe a retirement account, hoping to build a nest egg for the future. Our primary goal is wealth accumulation. We're trying to build the mountain. Billionaires, they're already standing on top of the mountain. Their main goal isn't necessarily to grow their wealth, it's to preserve it. When you have billions, your biggest fear isn't missing out on the next hot stock, it's losing what you already have. So, their number one priority is capital preservation. This simple difference in mindset changes everything. While we're chasing returns, they're managing risk. So, how do they do it? The first key difference is access. Billionaires have access to investments that are completely off limits to the average person. We're talking about private equity, venture capital, hedge funds, and direct investments in private companies. Think about it. When you invest in the stock market, you're buying a tiny piece of a massive publicly traded company. A billionaire, on the other hand, might directly fund a promising startup before it even thinks about going public. This is venture capital. They get in on the ground floor, often with preferential terms, and if that company becomes the next big thing, their initial investment can multiply by 100 or even 1,000 times. We hear the success stories, but we don't have the opportunity to participate at that early stage. Then there's private equity. This is where firms buy entire companies, improve them, and then sell them for a profit a few years later. Billionaires can invest directly in these funds, gaining ownership in a portfolio of private businesses. These deals require huge amounts of capital, millions, if not tens of millions, just to get a seat at the table. For us, that's just not feasible. The second major difference is their time horizon. Most of us are investing for a specific goal within our lifetime retirement, in 20 or 30 years, a house down payment in 5 years. Our timeline is finite. Billionaires are often playing a much longer game. They're not just investing for themselves, they're investing for their children, their grandchildren, and generations to come. They're thinking in terms of creating a dynasty. This is called intergenerational wealth transfer, because their time horizon can be 50, 100, or even more years. They can afford to invest in assets that might be illiquid or take a very long time to mature. Think about things like vast tracts of timberland, art collections, or even vineyards. These are tangible, real assets that tend to hold their value over long periods, protect against inflation, and aren't subject to the daily whims of the stock market. An investment in a forest might not pay off for decades until the timber is harvested. But for someone planning for the year 2100, that's perfectly fine. For the average person saving for retirement, waiting 50 years for a return just doesn't work. This long-term view also allows them to ride out market volatility without panicking. When the market crashes, many retail investors get scared and sell at the bottom, locking in their losses. A billionaire with a 100-year plan sees a market crash not as a disaster, but as a massive buying opportunity. They have the cash reserves and the stomach to buy up high-quality assets when they're on sale, which is a huge reason why they come out of recessions even wealthier than before. The third pillar of their strategy is diversification, but on a whole different level. When we talk about diversification, we usually mean having a mix of stocks and bonds, maybe some real estate through a REIT. A billionaire's portfolio is diversified across asset classes, geographies, and currencies in a way that's hard to even imagine. They won't just own stocks, they'll own public stocks, private equity, and venture capital. They won't just own bonds, they'll own government bonds from multiple countries, corporate bonds, and private credit. They won't just own real estate, they'll own commercial office buildings in New York, luxury apartments in London, agricultural land in the Midwest, and industrial warehouses in Asia. They also invest heavily in what are called alternatives. This includes things we already mentioned, like hedge funds and private equity, but also extends to commodities, precious metals, fine art, rare wine, and even intellectual property rights. These assets often have a low correlation to the stock market. This means that if the stock market goes down, these assets might go up, or at least hold their value, providing a powerful buffer for the overall portfolio. It's all about creating a portfolio that can withstand any economic storm. The fourth key is the team they have behind them. You might have a financial advisor or use a robo-advisor. A billionaire has what's called a family office. This isn't just one person. It's a dedicated, full-time team of professionals whose only job is to manage the family's wealth. This team can include investment strategists, tax lawyers, estate planners, accountants, and risk managers. This team scours the globe for unique investment opportunities, performs intense due diligence that would be impossible for an individual, and structures deals in the most tax-efficient way possible. Tax optimization is a huge part of the billionaire's game. They use complex legal structures like trusts and foundations to minimize taxes and ensure their wealth is passed down smoothly through generations. While we're concerned with things like capital gains tax, they're operating on a level of tax strategy that saves them tens or hundreds of millions of dollars. That's money that stays invested and continues to compound. So, what can we, as regular investors, learn from all this? We might not be able to buy a private company or set up a family office, but we can adopt the billionaire mindset. First, think long-term. Don't get spooked by daily market news. Create a solid investment plan and stick with it. The real power of investing comes from compound interest over many, many years. The more you can resist the urge to react to short-term noise, the better off you'll be. Second, focus on what you can control. You can't control the market, but you can control your savings rate, your fees, and your behavior. Automate your investments so you're consistently buying whether the market is up or down. This is called dollar-cost averaging, and it's a powerful way to build wealth over time without trying to time the market. Third, while we can't access private equity, we can still diversify effectively. Look beyond just the stocks of your home country. Invest in international stock funds. Consider low-cost REITs to get exposure to real estate. The goal is to own a mix of assets that all move in the same direction at the same time. And finally, prioritize financial education. The billionaires have a team of experts, but we have access to more information than ever before. Read books, listen to podcasts, watch channels like this one. The more you understand about how money works, the better decisions you'll make. Don't just follow hot tips. Understand the principles behind sound investing. Your biggest asset isn't the money you have, it's your knowledge. The world of billionaire investing is fascinating, and while their tools are different, their core principles of long-term thinking, risk management, and continuous learning are universal. By applying these lessons to our own financial lives, we can build our own version of lasting wealth. Thanks so much for watching. If you found this helpful, do me a favor and hit that like button and subscribe for more content that helps you level up your financial game. See you in the next video.